So thanks for having us today. I'm Kevin, managing partner of L2IV, one of the co-hosts of this conference today. And today we're going to be talking about the new corporate playbook, digital asset treasuries. Maybe before we start, maybe we can level set a little bit and sort of understand how do we get here actually, digital asset treasuries? Maybe not Korea because there are structural barriers here, but in the US, I think it's a very hot topic these days. Everybody is talking about DATs. But what's the motivation for investors to invest in a DAT where they actually have access to ETFs? They can buy the underlying outright, right, on the spot market. Maybe you guys can talk about the rationale for investors to investing in DATs. And a follow-on question, maybe if you guys can also touch on, what does that MNAV premium represent? Why are investors willing to pay a premium to own an asset where they can actually easily access? Maybe you guys can tell the audience some thinking behind that, please. Maybe Andrew, you want to start?
Yeah, I'm happy to start. I think on the first point of why would an investor own a DAT versus the underlying, I think we have to break it up of, the DAT is a corporate entity that owns Bitcoin, and within that there's going to be various securities within its own capital structure. And so, different investors have different return profiles, have different volatility preferences, have different, risk management exercises. And so, an equity investor is going to be very different than a fixed income investor. And what a DAT provides those investors is underlying exposure to cryptocurrencies and Bitcoin in this example, but with the very tailored exposure profile. So the payoff of a convertible bond looks very different than the payoff of an equity, which is very different than a payoff of a preferred equity vehicle that pays some sort of fixed income coupon. And so it just really expands kind of the return profile that certain investors are looking for that they did not particularly get previously by just holding the underlying asset.
Got it. Maybe accessing different capital pools, so to speak, right? MNAV.
MNAV.
Why are people paying a premium over Bitcoin or Ethereum?
So this is a very hotly debated topic, and I don't think it's still in flux in terms of the valuation models of DATs. I think the first question people get is, why would I pay any premium for a DAT that trades above its treasury value? And again, going back to maybe my previous presentation. The core metric being, units per share. Unlike an ETF or holding the underlying where the static amount is always fixed and it just tracks the underlying, in a corporate structure, you're able to drive growth in that metric. And so if you think about the MNAV premium, I think the analogy would be, it's just as simple as a valuation multiple on that underlying growth profile. So just like how someone would pay a PE multiple for X amount of earnings, the higher the multiple, the higher the implied growth rate in the future is. For DATs, it works very similarly where, if you look at high MNAV DATs, it's an implied higher growth rate of that Bitcoin per share.
Jonathan, you have anything to add on that?
Yeah, I think a couple points. I think Andrew made some great points. I think first of all, from an institutional, especially the active managers, there's actually a mandate issue with tokens and ETFs. For example, if you're at a large hedge fund or you're a long-only manager like a Fidelity Capital or Point72, you can't go and buy an ETF because you're being paid a lot of fees to go pick stocks. So that's become an alternative way for them to get crypto exposure while owning, call it an active security versus a passive security. That's sort of number one from an ETF perspective. And number two, from owning the underlying token, I think that's a fairly cumbersome journey for a lot of traditional capital. The average sort of hedge fund managers, probably late 30s to their 40s for the most part. And they're used to their portfolio margin being with their prime broker. Everything is part of their equities portfolio or with their prime broker, even their fixed income, to have a separate asset pool that they can't get leverage off and among other things, monetize or borrow and do many things that they're used to. Familiarity is very important. So I think they prefer the listed or equities vehicle to express their crypto exposure compared to holding the underlying token. So I would sort of add those 2 points in terms of why they're not participating, why they're participating in DATs.
Yeah, and also just for the benefit of the audience, MicroStrategy actually trades $3 billion a day, just to give you a sense of the liquidity associated with these DAT vehicles. Yeah, no, thanks. I also want to touch on, you mentioned a key metric, Andrew, in your earlier presentation around Bitcoin per share, right, and increasing that number. Obviously, following Bitcoin, there are increasingly different variations of DATs. Ethereum is one of them. And you mentioned on your slide, I saw that organic yield is a way to increase that number, right? Maybe Lucas, you can touch on like how is Renzo positioned to help some of these Ethereum DATs to drive that organic yield number, right?
Yeah, so there's going to be a number of things to consider, and we're still very early. But DATs, we just talked about why specifically with Ethereum, there is one differentiator where the staking ETFs that we're anticipating in the US, because of the redemption and the reserve ratios, everybody very quickly realized that owning DATs and deploying onto Ethereum is going to be much more effective than staking ETFs. So I think that's one thing I just wanted to add to that. When it comes to Renzo, you have to look beyond just staking and restaking, where Renzo started. We have just under $2 billion of assets under management. And there's a lot of different protocols out there that do have ETH on their balance sheet, or not on their balance sheet, that protocols that have ETH. But the big differentiator really comes down to two things. One is the distribution channels within Ethereum. So you're going to see this play out, and what we've been trying to do is talk to all the DATs, build relationships with them, and understand what kind of appetite and how they're going to want to differentiate between themselves. If they're all doing the exact same thing, then their MNAV and their premium they're not going to be able to be competitive. So the first thing that you're going to see them do, and they've already started doing that, is they're going to do native staking with beacon chain validators. There's nothing very sexy about that. They could do that today. So not much differentiation. The next thing that they're going to be getting into is liquid staking and restaking. And the reason for that is because they can generate a little bit higher of a yield. Now, when you start thinking about liquid staking tokens, there's only a handful of protocols that have an asset that is secure. So security is still very important, but has the distribution channels within the Ethereum ecosystem. So we're talking about blue chip integrations with Aave, MakerDAO, which is now Spark, Morpho, have the right integrations with Chainlink oracles for proof of reserves. And then when you take it a step further around security, there's really only Renzo who is US based. As a founding team, we do all our operations. A year ago, it wasn't that sexy to be in the US, but a lot of these institutional players and DATs that we're talking to in some cases are on our cap table as well. Galaxy being one of the biggest asset managers for SBET and a couple others that they're working with. So that's like one piece is the ETH and being able to deploy their ETH on chain, being able to generate yield with liquid staking, and then you're going to actually see them, and they're going to differentiate. They're going to want to get exposure to different kind of organic yield that we so love in the Ethereum ecosystem. The other side of it is, from a differentiation standpoint, we know and speaking to the ETH DATs is that there's going to be acquisitions and they're going to be taking on other assets on their balance sheet. And when you think about who are they going to prioritize, they're going to prioritize the partners that they're working with, that they're deploying their capital through to build a stronger relationship and also get exposure to that. You saw that with BitMine yesterday. They announced the acquisition into a DAT that's acquiring WorldCoin. The reason they're doing that is they're starting to figure out on the risk curve where they want to go and what kind of exposure they could differentiate themselves to be able to generate that MNAV. So you'll see Renzo in two places. You'll see the ETH that's actually deploying capital through Easy ETH, which is our ETH derivative. And you're going to see other announcements around partnerships and maybe larger integrations with these partners as they're trying to grow their operations internally. Most of the DATs don't have operations inside, so they look to outside players initially with asset managers to deploy their capital.
Gotcha. So as an investor myself, and some of you guys are also investors, looking at these different DATs, like how do we pick which one to invest into, right? Like there are 10 DATs that come across my desk: Bitcoin, Ethereum, Solana. We have a Sui DAT. Like what are the key ingredients now? How do we pick which one to invest? They all look the same to me.
Maybe I can just touch briefly on the first question and maybe second question as well. I think you cannot ignore the fact that as a retail investor, myself included, it's much more convenient to trade stocks rather than Bitcoin itself. So if you are in US investor, you can invest into MicroStrategy. You believe in their long-term Bitcoin store value strategy. You know it's a bit leveraged as well. So if you're a believer in Bitcoin, maybe you can gain a higher return from investing into MicroStrategy type company rather than Bitcoin itself. At the same time, you just need your stock account. You don't need any separate account. So you don't have to track your trading. You don't have to go through separate accounting and tax issues. They are very complicated, actually. I was in the morning another seminar run by AmCham where US IRS came and talked about the taxation of the cryptocurrency in US. It's very complicated, but if you buy through the stock, you can set up your capital gains against the other stocks, and everything is a lot more convenient, and it's a leveraged place. So I think certainly people are willing to pay premium. It also has that cultural aspect, meme culture type as well. A lot of Koreans also, individual investors own MicroStrategy.
I heard Korea is one of the biggest buyers of Bitmine too.
That's right. So it's the fact that they want to be involved in the new culture of cryptocurrency and cryptocurrency strategy and Bitcoin treasury company type. So I think that's why there's a premium on the net asset value of the Bitcoin Treasury Corp. And differentiating among various cryptocurrency treasury companies, I do agree each cryptocurrency has the role of their own treasury type, but obviously the starting point I think should be a Bitcoin is the one where there's no foundation controlling it. It's truly decentralized. Nobody can censor against Bitcoin. So naturally, I think Bitcoin Treasury company is the leading among crypto treasury companies.
Yeah, I do agree. I think for us, sometimes the management team is actually very important for these treasury companies. Like Andrew here is the Michael Saylor in Korea, so definitely something that you guys should pay attention to. I think we have 3 minutes left. I do want to ask you guys one final question: is are we in a DApp bubble right now? Because there are many of these things, and I've noticed recently over the past month or two that the MNAV is actually compressing, right? It's coming down. So are we in a bubble? If so, how is this going to end? Is it going to be like a Celsius situation are we looking at, or something not that serious?
It's hard to determine whether you're in a bubble or not. What we do know is that we saw the first wave of DATs come to market. I think the big difference with setting up a DAT, the barriers to entry are actually very, very high. So it's not like previous cycles that we saw that anybody could just go and launch one. Now, does that mean that you're not going to have some structures that are set up that are not going to survive. Of course, that's always the case. But I think we saw kind of the first round of DATs, especially on the Ethereum side. There was quite a bit of activity over the summer with different kinds of DATs on the Ethereum network that wanted to launch. Many of them haven't been able to get to market. And in talking to a lot of capital folks, liquid capital investors, they really wanted to see, instead of just deploying into new ones and hoping that they were going to get an MNAV and a quick return, they did want to wait and see what would happen as you saw the compression on MNAV, and be able to come into the market and buy those at a discount. Also see how these companies are going to be stress tested. So we're seeing that stress test already now. But in my opinion, once we kind of go through that stress test, you're going to see a consolidation. You might even see an acquisitions of DATs between each other to gobble up more of the underlying treasuries. And then you're going to start seeing this diversification as they start figuring out how they differ between each other. So I think we just saw kind of the first wave, and it's going to be a little bit slower. But once you see that second wave come, I think you're going to see much stronger vehicles that are differentiating themselves.
Please, you guys have any input?
Yeah, the question was, are we in a bubble?
There's a lot of DATs right now, right? So
There are a lot of DATs. I think it is very case dependent on a few factors of maybe things like, geography, as Kevin mentioned, quality of the management team, and even just starting size of the DAT. So I think if you look at examples like the very successful example of MetaPlanet, they started at $25 million market cap. It's very different than most of the deals launching, where you're seeing an investment bank raise $1 billion pipe, some of it in kind. So I think all the nuances of the deal structure, the deal dynamic, the region, it all comes down to what is the go-forward growth rate of that DAT able to deliver that units per share metric. And so something trading at 10 times MNAV might seem like a bubble, but if they're able to double their unit growth every few months, you grow into that multiple very quickly. If there's a DAT that just, for example, has like $5 billion to start, trading at 10 times MNAV, you need to raise $50 billion to grow into that. So that might be a bit more overvalued. So I think it's just more of a nuanced answer and a bit case by case.
Yeah, maybe what I'll add is also, I think the market context is we're 3 years into a crypto bull run, right? From 23, 24, and 25, 3 years of up. Most folks are expecting a down year coming up. If we follow the historical sort of crypto 4-year cycles around the halving. So I do think that is posing a bit of a pause in terms of the MNAV multiples, in terms of pressure. I think as Andrew mentioned, MetaPlanet was probably up to 6 times at one point. Now it's closer to 1.5. I think it's actually a very healthy normalization. I think what we're also seeing in terms of a deal perspective is you're seeing more non-BTC DATs. Solana being one, BNB have done one recently that's actually trading relatively well. I think you're going to see more alternative tokens that are still large in size and liquid, but there's still investor appetite for that. And then the increasing focus on yield as well as diversification. So I think I wouldn't be surprised if there's a DAT that's going to accumulate a range of exchange tokens, whether that's BNB, whether it's HYPE, whether it's OKX. By the way, those 3 are the 3 tokens that have actually outperformed Bitcoin during recent times. So I think that's going to be a next step. I wouldn't call it a bubble. I think it's more just a recalibrating of expectations, and then we still have a very long runway in this journey.
Got it. I mean, that's it. We're out of time, but thanks for the panelists for your incredible insights today. Thank you.